Hello, this is Professor Minton, and I want to walk you through these journal entries for establishing the opening entry. And I'm going to use Matthews because I can't do one on my own. I have to use somebody's a client. Matthews is a little bit problematic in that he did not eliminate his previous balances, and because of that, and because they're over 60 days old, it won't let you do it unless you have a brand new QuickBooks account. So you'd have to delete your old account and come up with a new one. So his is going to be just a little bit different than yours, but we should be able to work through it anyway. Now, in order to save some time, I have created these journal chart of accounts, the new ones that we need to do this. And where your starting point is the Media Moguls Exhibit 2 chart of accounts. Now, this is your original trial balance chart of accounts. And again, one of the things that you probably will have to do is change that to 2019. It may not let you do it as of October of 2020 because you're not there yet. So you may have to go with 2019 in order to make that happen. Um, and so at this point, let's um, let's go and enter these entries and see if we can come up with the balance that we need to at the end, which is 870,000. Now, I don't hold out much hope that it's going to happen here with Matthews because we have a beginning equity balance that is problematic for us. But let's just see as we walk through and see how that works. So we have cash to start with of 287.5. And so the first one is simply cash on hand, 287.5. And I'm going to call this the opening entry, which is what it is. And we'll go to the next one. And the next one is land for 200,000. I want to say I had to create it. So in order to create it, you're just going to add new, and then you're going to find fixed assets because that's what it is. It's a fixed asset, wherever fixed assets are, someplace down through here. And so you'll create it. Well, in this case, I have land, but I think it's because I already created it. You may have to just find fixed assets wherever they are and then create land underneath it. In my case, since I've already got land, I can just pick it up. But if you don't, you'll have to add land as a thing. And remember that right now, what we're working with are all of the fixed assets to start with. And the land, as I recall, was 200,000. And so let's get rid of the credit over here and drop down to the next one. And the next one was vehicles for 50,000. Again, I had to add vehicles, and when I added them, again, make sure that you're creating those as fixed assets because you're going to have some depreciation against it. And I'm not sure where that's at. There it is, vehicles, and it was for 50,000. And so come over here and get rid of this thing. And the next one, in this particular case, with the vehicles, we had $20,000 worth of accumulated depreciation. So again, I had to create the accumulated depreciation account, which is a sub account of vehicles. Okay. And just as a note, you're going to have to create these as you go. Um, Now, in this case, I had a balance for it, and the others were having to compute an initial balance, so you wouldn't have anything in there yet. You don't have to create them until you get ready to actually make the journal entries. And that accumulated depreciation was 20,000. And notice that it's a credit, of course. Office equipment, and I think I treated that as uh, computers maybe. And so I may have had to create this. I don't remember, but um, I have fixed asset computers, I think probably already existent. And that was 10,000. And you notice that what it wants to do is it automatically wants to put the balancing entry over here, which is supposed to save you time. But in our case, because we're creating all of these from scratch, it's really not going to save us any time. Again, when you calculate the depreciation, you'll have to do a journal entry just like this one and debit depreciation expense for the current period and credit the accumulated depreciation on the fixed asset computers. Now we have office furniture, and the same thing is true here. We don't have any depreciation yet. You'll create that initially, and I think you have the information necessary to do that. And so anyway, so here's the office furniture, and I think either there's one created or I had to create it. If you don't have it, in this case, fixed asset furniture is here, and I think it's for 2,500. And again, we have to get rid of that thing. And we're just walking down this trial balance, picking up these accounts as we go. The next one is buildings for 320. And the buildings is in here someplace. And that I may have had to create it. I don't remember. Here's buildings. And for 320,000. And I want to say that's the last of those assets. So let's go to the next item on the list, which is now down the vehicle note payable current. And I had to create each one of these under other current liabilities. And that was I mean, if you treat some of these as like bank accounts or something like that, what's going to happen is they're going to show up under bank account instead of under the proper category, which in this case, if you were creating one from scratch, this was other someplace here. There's another current liability kind of thing. And you just have to find it, find that heading. And in this case, I have let's see here, vehicle note payable current. I think that's the one I was looking for. And over here we have 2029.95. And the next we have mortgage note payable current. And again, I had to create all of these, and you'd have to just create it. These are other current liabilities. Mortgages payable current. And whatever the number is, 57, 55, 68. And next we have land note payable current 54, 59, 73. And someplace here we have notes payable land. Now that's the long term. You have to create a long term as well as a short term. Here's the current one. And 59, 54, 59, 73. So I think that takes care of all of our current ones. And remember that those are all treated as other current liabilities. That's your category for them. And coming back over here, we have non-current. Okay, so these are in the out years. All of these are in the out years. So they're long-term. Vehicle notes payable, mortgage, and so forth. So we have to go over there and find that one. And again, I had to create each one of these because they didn't exist. And of course, those are going to be under your long-term liabilities. So you have to classify them accordingly. The first one was notes payable vehicles. And 32,970.05. Again, his is probably not going to work because I'm going to have to make another journal entry someplace to get rid of that stuff that was already out there. You wouldn't have to do that if you eliminated all of that, all the stuff that was there before. Mortgage notes payable, and wherever that's at, notes payable, again, make sure you're picking up the long-term one. And 244, 244.32. And then your notes payable, land 144, 540.27. Again, make sure you pick up the long-term side of it. And that's going to be 144, 540.27. And then lastly, this is the one I've got. See, I've got 870,000 on this side, and so hopefully I'll be able to come up with it on the other side. And so we're looking for opening balance of equity for 415. And so you see now that I have 870,000 on both sides, which is the same number that I have down here, 870. So that gives you your opening balance that is correct. All right. Now, again, with Matthews, I think we may have to make some adjustments. I tried to make them already. I don't know whether they took or not. Again, you would start from October the 1st of 2019 with his because he already had these pre-existing ones that we were unable to get rid of. Um, I had to go ahead and close his books as of the 31st of March and then open them up. So for him, April, May, and June will be the 3 months instead of October, November, and December. So with that, I'm going to save this. And if we were lucky now, when we went and looked at our reports, which I don't think were going to be in his case, but if we were lucky and we looked at our reports, um, because of those initial things that I couldn't get rid of, I think he's going to have some kind of funky looking stuff down there. Um, oh, got to get the right time frame here. Let's do all dates and run the report. And as you can see, there is a discrepancy on his, and it's going to be for that opening, this number right here. That is a problem for him. It should not be a problem for you. And I think that that number then gets reflected someplace up through here. I'll have to look at his to see how I can maybe creatively find a way to get rid of that. But I think that um, if I do, that should take care of all of the problems. Again, because when we did the opening journal entry on the other page, it did come up with the 870,000. In your case, if you were able to delete all of that stuff that was pre-existing from ABAC Farms, if you were able to delete all of that stuff successfully, then you should be able to just make that journal entry I just made, and it should give you then all of these. Now, if you don't have something in the right place, like if you look up here, you can see that I have my fixed asset buildings and so forth. Notice that the vehicles underneath that, they have accumulated depreciation. So I made this accumulated depreciation account for the vehicles a sub account of vehicles. Now, when you get ready to do your depreciation schedules for buildings and fixed assets, computers, and so forth, those will be done. Um, those will be done on as also as sub accounts of buildings and a fixed asset computer, so they show up like this right here. Okay, if you don't, well, it'll just show up in a funky way. So it's better when you can put them in like this because each one of them then would say buildings, and then accumulated depreciation, and then fixed asset computers and accumulated depreciation, and so forth. And that makes it easier for me when I go through trying to figure out if you actually computed the depreciation correctly or if there's a problem somewhere. That'll at least isolate for me what the problem is. And I'm looking down through here just to see if there's anything else that I see on his. Um, and what it is, again, it's these guys right here. He's got too much in here um, by 38,000 and too little down here. But somehow or another, he's still not coming up here with the 870,000. I think it just has to be related to those to that number, but I'm just not sure without going through and trying to figure out a way to eliminate it. And I'm not sure I can at this stage. So it may be that I just have to treat his as a little differently when I look at it, knowing that it's going to be out by that amount. And that's it. That's the way that you make the first entry. I'll be back with another video on going forward on making some of these others, but you've done those enough already that you should be able to make the actual entries. And with that, I'll close.